In this video, we will learn about the components of a budget. So as you can see here, the components of a budget, government budget, or the annual financial statement, as it is called, can be divided into budget receipts and budget expenditure. So in case of budget receipts, there are two kinds of receipts, that is revenue receipts and capital receipts. So revenue receipts are those kinds of receipts which we receive every day or after a particular interval of time. It is continuous. So for example, if we take an example, then it is a kind of, if we take example of our revenue, that is if we are working somewhere and we get a particular salary after 1 month or 1 day, then it is revenue receipt is like that salary. So in case of revenue receipts, the government has tax receipts and non-tax receipts. So you can think of revenue receipt as everyday receipts of the government. So in case of tax receipts, it is the tax like income tax that we pay every year. Then there is the corporation tax, corporates pay the corporation tax. Then there is GST, there is service tax. All these are the taxes that the government applies on us, and many other taxes are also there. So these comes in the tax receipts of the government. Then non-tax receipts are those receipts like the fines we pay while we commit a mistake while driving a vehicle. So these all come in the non-tax receipts, which are not imposed as tax. So these are the non-tax receipts. So after that comes the capital receipts. So these types of receipts are those types of receipts of the government which change the assets and liabilities of the government, which make a change in the assets or the liabilities of the government. For example, recovery of loans, that is if a government has given loan to some other country or some organization or some state, then if it recovers the loans, then the state has to pay it back with the interest. So it will go in the capital receipts of the government. Then borrowing and other liabilities, if the government has borrowed some money from RBI, they are also counted in receipts. RBI or other organizations like World Bank or International Monetary Fund, these all gives loans to the government at cheap rate, or some other countries also, then they are also a part of the capital receipt of the government. After that, disinvestment, that is if the government sells the public sector undertakings or the PSUs, then this forms a part of the disinvestment sector, and disinvestment, and also it forms a part of the capital receipts. So these are the form of capital receipts which make a change in the assets and liabilities of the government. Then comes the budget expenditure. So in case of the budget expenditure, we have two parts again, revenue expenditure and capital expenditure. So revenue expenditure is that type of expenditure the which government has to pay every month or every year. For example, the salaries of the government employees, the pensions of the government employees comes under the revenue expenditure. And in case of capital expenditure, it is like government has to make roads or bridges or invest in infrastructure or factories or create jobs. So it comes in the capital expenditure, that is the long term expenditure is the capital expenditure, and short term expenditure is the revenue expenditure. In case of revenue expenditure also, there is the planned expenditure and non-planned expenditure, and in case of capital expenditure also, there is the planned expenditure and non-planned expenditure. So the expenditures which are earlier planned by the government or are known by the government come under the planned expenditure, and in case of revenue expenditure also, and in case of capital expenditure also. And those expenditures which happen unplanned or are planned at the point of time are known as non-planned expenditures. So this is all about the components of budget of the government. Hope you have understood the topic, and hope you have understood all the terms in the topic, and hope you found this video informational. So I'll see you in the next video.